Welcome everyone to the Kendall Report, where I share my 42 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, twice in one day. This is exciting. Yeah, today was a wild market to say the least, and the first time we've seen anything like this for almost a year, I would think. I don't recall any days this year that look like this. We'd have to go back to last year when we saw a 100-point day in the S&P. But as I discussed in my live stream I did earlier today, I thought we would rebound. We're continuing that rebound. We're up about 16, 18 handles right now in the futures. But there's really nothing new that's going on in the world other than what we talked about yesterday and last night, which was, the Evergrande situation, the debt ceiling, the infrastructure deal, and the Fed. That's a lot to talk about. I'm still just to go back and just talk a little bit about some of the action yesterday. S&P was down 1.7. It actually touched at the lows, roughly down 5% off of its highs. So that's sort of an interesting event. I think that's the first time that's happened for maybe 12 months or more. And that the NASDAQ was down 2.2 and Russell down 2.4. As we saw overall, though, the markets rebounded pretty good, and we were live into the close, and we saw that bid come in. And I just don't think, I'm now going to the Evergrande, I don't think this is a material event for our markets. I had a famous line back in, we'll call it 1992-ish maybe, when the wall fell in the Soviet Union, and I was standing on the floor with the largest trader, one of my old partners, on the trading floor, and the market was down 100 points, and 100 points on the Dow Jones was a lot in 1992. That was a big day. It was about like what we saw today. And we were looking at the markets being down, and I looked at him and said, what does the fall of a wall in the Soviet Union have to do with corporate profits in America? And he looks at me and goes, probably nothing, huh? And we all went and started buying. It was just buy the dip opportunity. But the reason why I tell that story, it's the same thing here. China's likely to bail out this thing. They're not going to let it go down. If anything, they just want to regain maybe some control they may have lost of it. So I don't think it's going to be a material event. I do believe, however, that the other things out there that we need to watch is, this debt ceiling could end up to be a big war, and that could have some serious effects, I think. I've been through these things, I don't know. I can't even remember when debt ceiling fights haven't occurred over the years. They've been going on so long. If you ask me when was the first one, I couldn't tell you. But it was a long time ago, and it just seems to be the cycle. Anytime this thing comes up, we go through the same type of cycle. So debt ceiling, though, I think in 2021 is something that maybe there are folks out there that want to go to war over this. And there's a lot of questions. So the debt ceiling all of a sudden brings in the next factor, which is the infrastructure deal. And that deal, I told you, I don't know, maybe 2 months ago, maybe as long as 3, that this was actually going to be just noise in the markets. They probably weren't going to get anything done for a while. Now, because of Joe Manchin, they're talking about maybe 2022 to deal with this situation. So this is going to get very interesting. I believe it's going to continue to be a story. And as long as they can tie all these things together, they will. And so the last thing, of course, we have the Fed. And I'm willing to sit here and tell you right now that I think the markets will stabilize in the next couple of days. No one's going to want to do anything before Powell talks on Wednesday. That's just going to be a thing, and we're going to have to wait until Wednesday. As it turns out, I'll let you know exact timing tomorrow night. It looks like I am going to have time to do a live stream during the Fed, and like old school live stream that we used to do a number of months ago. So I will definitely get that going, and I will let you know tomorrow night the exact time, whether it'll be a full 2.5 hours or maybe an hour and a half or something. But I want to be live when the Fed comes out so we can watch all this stuff together. So that's good that my schedule worked out for that. But we come into today on Tuesday, we're going to see housing starts and building permits coming out. Those are the two main things. I think folks are going to start to think about what's real in this economic situation. And their housing starts expected to come in 1.57 million units and permits 1.62. I talked about this a bit last night that I think these metrics, it's hard to make a call on these on how they're going to come in just because of all the supply chain disruptions and everything that's going on. We also talked a little bit last night about all of the ships that are backed up in Long Beach and LA, and I think there were 60 boats backed up. They're all the way down to Newport Beach. And somebody made a comment that's like 6 weeks to clear out. That's considering nobody else shows up, which I suspect it will be. And that's going to be something to watch closely as well. And we won't see some of those effects maybe until we get our next CPI and PPI numbers next month as we get into October. So I think the saga that's going on is going to get more and more interesting, more and more unpredictable, more volatility as we come in. We saw VIX print up to 25. I think it closed over 25 today. So we're just seeing this volatility kick up, and I'm glad it's back. As I mentioned in the earlier stream today, and I put on Twitter as well, is that we did have a sell signal at 35.01 on a daily. I think that's probably, it's going to be interesting to see if that signal actually ends up making profits. But I certainly, if I'd been short, I would have looked to take that thing back in, especially when we were printing 4,300 today earlier. The market got down to, I believe, 42.92, something like that. So it was pretty substantial as we look there. I'll go through all the details here in a minute. But I think the big thing to just look at here is that this Evergrande thing may affect sentiment for a few days, but I don't think there's any economic impact on the U.S. or any of our corporate profits or anything that's going on here. There's a lot of other things. There's one thing I didn't mention that's also in play is with that infrastructure deal is a massive increase of taxes and all corporate taxes, everything. And right now, the economy, everything's still operating on the 2017 tax changes. So we're still operating on that mode, and things seem to run pretty good within that structure. We start changing that structure, we're going to see more impact on the markets from the standpoint of volatility and expectations, because whether or not people think there's not going to be any new taxes on people under 400,000, well, they're going to tax small businesses, all kinds of stuff, and it's going to be there's going to be an impact on the economy. And if you have to buy things in the economy, you're going to be impacted by this change. So don't be too naive thinking it's not going to impact you because you don't make more than that number. It will definitely have an impact on everybody, the economy, and ultimately probably jobs and everything else. And I did see a number of things coming out through CBO and some other things that are somewhat concerning. I'll leave those alone for the moment. So just looking at that, let's go ahead, and what I want to do next is get into I'm going to go through the database, and as expected, as I talked about earlier, is something interesting did happen, and I thought it would. Well, we had a massive amount of sells. Let me just zoom in here. And we had a total of 3,550 sell signals, 151 buys, virtually none. And I talked about this blowout in the database earlier today. We're at 20.39. The last extreme that we had was down around 17. And typically, this is about where this thing ends. So we'll get blown out. We only have two sectors long right now. You can't see those on the screen at the moment, but let me go full screen just so you can see this. Down below, there's two sectors. Energy got a signal on 9:14 and 8:30 on transportation. These things are fairly new signals, but every other sector is out right now. There's only two sectors long. Out of the groups, there's only 34% long. And over the last 2 weeks, this is interesting. Over the last 2 weeks, there's been, I'm just going to add it up in rough numbers, but they're right in the middle of the page here. Over the last 2 weeks, there's been 11,500 roughly sell signals and 3,000 buys. So there's been basically a net 8,000 buys, sells in the last 2 weeks. And I talked about this earlier today, is that most of the strategies, even on most of the intermediate strategies that are utilizing individual stocks, have already moved to 40 and 60% cash. So we're already protecting that whole thing. When I come on just a few minutes ago and say, I'm here to help you manage your portfolios and protect your wealth, the way you protect your wealth is you get out of harm's way. You get off the railroad track when the train's coming, right? That's what we've been doing for the past couple weeks. And I've talked a lot, just to go on a little bit more about the database, is that I've talked how this database just couldn't get the traction. We got above 48 and we just stalled at the 52% level, and it just stopped. That was it. We came back to 48, 46. We tried it again. I think we got up to 55 and thought, okay, we got it. We're going to go up to 62 and hit some of these higher metrics and everything's going to move forward. Well, that never happened. We saw the market roll over again back into the 40 percentile range, and now here we are at 2039. So just want to keep going here, because this, I want to set up your expectation what's likely to happen when the database breaks down like this. What this means right now, I just mentioned the 11,000 sell signals. Most of the database, close to 60, say 65 to 80% of the database, all of the technical uptrends that were in place have been violated on a short-term basis. Now, it'll be interesting because whether the market recovers by the end of the week and what happens there will tell us a lot of what's likely to go on with the intermediates. As you know, I had expected to see a bit more selling. I thought we did get below 62% on the intermediate database, but we didn't see that bigger sell number that I thought we would see. And just to finish up the database, I know I went a lot on this, but this has a lot to do with our expectations. The intermediate database right now is, the current duration now is backed off a little bit. We've got 100 on an optimized basis, 104% of the duration has been realized. Otherwise, everything is very long in the tooth across the range on an intermediate level, and that just spells for some type of rollover, some type of correction, and if nothing else, we get some kind of high level consolidation and all that. And I'll break down more of these numbers over the next couple of days. I'll be able to zero in, I think, and I'll go through the technicals here in a minute. So let's go ahead and dig into that stuff, because I think that's going to tell us a lot about what's going to go on here as we go forward. Now, I mentioned in yesterday that the futures actually issued a STX buy signal. We closed under 43.67. We closed at 43.43. And so that signals a sideways to slightly up for the next couple days. And that would suggest that we would go to R1, R2. R1 is 43.61. We printed 66 overnight. And then R2 is 43.82. I suspect we'll see an R2, and we might print down toward a 43.24 S1. So look for S1, R2 on the futures as we go through today for Tuesday, and that will get us to the point of at least setting up maybe another day or so of sideways. If you look here, it's interesting. The PPMs are in trend mode on PPM 1, but we're already the PPMs are turning up. We'll have to get through its first and second derivative. We'll have to, right now it's a minus 0.34, so I'm going to want to see that come back above a minus 0.25 or greater, and then we'll at least be able to look at some kind of consolidation, maybe a setup for a rebound back to the averages. What's happening here is 44.38 is the 10-day moving average. It dropping roughly about, we'll call it 16 handles. And this is the valid calculation for today, 44.38. You'll see that on the pop-up that I have on the screen. We should see it at least stay below that for the next couple of days. Like I said, about 16 handles a day. So in a couple of days, we're going to be right back at 4,400. I think we'll probably challenge 4,400, maybe after the Fed, something like that. So, okay, so let's go to SPX. Same pattern here. We got the SDX buy signal. R1 is 43.72. 43.88 is R2. So look for S1, R2. 43 is S1. So look for S1, R2. We could keep the volatility up since we've kicked the VIX up to 25. Maybe we'll see an S2, R2, something like that. I'll try to update on Twitter. I'll be around tomorrow trading, so we'll definitely be looking at that as well. Okay, next market we'll go to is the NASDAQ, and NASDAQ printed down big numbers, and we flipped the entire script here. If you recall, last night, if we go back to yesterday, the PPMs had started rolling over. Just trying to get to, they had started to roll over. We were looking at still a slight positive. Let me get to the right one. We were down 0.20, so we were almost in a downtrend mode at that point. But that same thing happened here. We spiked down through the market grid and got an STX buy signal. So we've already printed. R1 is 15.084. We printed 15.065. So, but I look at these setups, should set up all the same, somewhere between S1 and R2 on the NASDAQ for today. I think it's interesting. I remember about a week ago, next market we'll talk about is the Russell. About a week ago, I was talking about this test of the 200-day moving average. Well, we blew through it today, and it's still slightly positive, but this market got, all of these markets got STX buy signals. So for today, we're looking for the Russell get back 2191. 2202 is the possibility for an R2 if we get an S1 R2. If I scroll down just a little bit here, let me get to the average here. 2203 is the 200-day moving average. So that should act as a magnet. We should get back above like we did last time. That upslope in the 200-day should be a reasonable positive. We'll see how we trade. But it's going to take a couple of days to recover after you break all these things. And we're going to have to see some sort of consolidation at least for a couple of days. And we're looking at the PPMs. PPM, this is the same mix. All these indices look the same, by the way. Is you've got PPM1 negative in trend mode, PPM2 and 3 are neutral, and typically what will happen is we'll come back into range. We should move back toward the 22, back into this grid around 22.13, 22.25, up in that range over the next couple of days. I think, like I said, that we probably printed an extreme low for the moment. We'll see how this thing plays out. I'll try to do my best, like I said, to update things on Twitter if I see anything happening. But I do look at that, looking at the Russell overnight. I'll just put it up on the screen. I usually don't cover this, but this is a Russell futures. We're already trying to get back to the 200-day on the futures. That number is 2194, and the last trade on the here is 2183. So I suspect we'll move back toward that, and there's a lot of downside action. This is the Russell futures that I have up here right now. All right, so next market we'll talk about is going to be the 10-year, just to cover it. I talked about this the other night that we got up to around 137. The range is still locked in, by the way, and we're looking at probably 128 to 137. So 1.28 to 1.37 on this. We should remain in there. I want to go to the weekly chart here very quickly, and we'll see this a little bit clearer. The 10 moving average, the 10-week average is 1.30. That should represent some pretty good support. We're also looking at the market grid here, S3 1.29 and 1.27. Those should be the extremes, and I think we'll stay sandwiched between the 1.3 roughly and around the 1.37, 1.39. I think we'll come back in, but I think a lot of folks are talking about this, when it comes to this, that the U.S. banks are heavily involved in Evergrande. I kind of doubt that, and they're going to get bailed out anyway. So there's no way they're going to just let this thing fold, and I don't think the banks are that exposed. We just did a whole review of the banking system just last quarter, so I don't see how that's going to be the case. But the bottom line is, this is the range that we should stay in there. The one last thing I want to show you is the yield curve, and this can, I talked a bit about this 1030s. 1030s are flattening, and so are, I'm going to show you another one here, the 530 is also, I'm sorry, I accidentally reduced it. Where'd it go? So here we go. The 530s are flattening as well, and what that means is the 530s are actually are gaining on the 30. The 30-year has been actually coming down a little bit more, so we're seeing this flattening of the curve. I've talked about this before. I still think on a 530s the Fed would rather have this about 1.3. That's a better ratio, especially for the financial sector. So I think they'll actually work toward that as well. So let's go over and take a look next at crude oil. I talked about crude oil, and I will cover Bitcoin. I usually do Bitcoins on Wednesday night, but this is a pretty big hit today. So looking at crude oil, it's up 53 cents right now, back to 70.66. I talked about these numbers in detail last night. 69.22 should be rock bottom right there. 69.22, 69.04. We printed 69.71, so we're getting a bit of a bid. This is on the weekly chart. PPMs, everything's in good shape here as far as that goes. I just don't see that happening where we're going to cut much below there. Also, the extreme for the week is between S3 69.39, 68.64. So I expect to hold right in here as far as the crude oil goes. It was a little bit, it was a nice bid in the gold today. Nothing off the map, but we definitely got back towards some of the numbers I was talking about 1764. We're looking at the grid here, 1776. I thought we would at least get up to that level. We managed to get to 1768, so we're coming right into that range. I think we'll continue to move up toward that range and see at least that R2 be hit. We could see an R3, and this would be positive. The PPMs are already set to turn around here, so I think gold will stay stable. As much as we look at this thing, it looked like it was ready to roll. If we look at this entire range here going back to June, we really are just seeing this sideways. We had a spike down, and we're really locked in this sideways range. So we still need to get back over 1800 to have any real positive thing going on from that standpoint. All right, so we'll do Bitcoin, and then I'll come back on screen. I mentioned last night, I thought if we got to 43,000, that would be a buy. Some things have changed a little bit, but we still have that PPM1 at 251. And so we've got very good support. We look at the market grid here. The low was 40,244, 40,000 S3, 40,382. This is on a weekly basis. So I'm surprised that we get down here, but I think just a general liquidation. You may remember a time when folks were talking about Bitcoin was going to be, some kind of alternative asset. When the market went down, it would go up and all that kind of stuff. Well, we found out it's perfectly correlated to everything as far as that goes. So we're really not seeing any of that action that we're hoping for crypto investors, that this would be some kind of, a non-correlated asset. Well, it turns out to be pretty much correlated, especially in these big sell-offs where folks are just liquidating across the board. So those folks that are wanting the institutions to get involved in Bitcoin, which they have at some level, that brings in this whole scenario of going on as far as that stuff goes. So I think there was something I wanted to cover, so I'm going to go back, which I normally don't do, but I'm going to go back. I just want to mention a couple of things here while I'm on screen, is that as far as the market goes, you have to remember everything that, while I show you the software and the platform and the portfolio management, we're almost at the point where from a portfolio manager viewpoint, we don't care what the market does. Now, when it's go down 10%, 15, we'll just raise a little more cash. We've already adjusted so much of our risk. We're not trading indexes in these things. You could be, but you're most likely, if you're doing individual stocks and using our management process and our platform, what you're doing here is managing the risk within those individual stocks. And like I said, you're probably at least 40 to 60% in cash. You've already lowered your beta by at least half at the moment. And chances are most of the stocks that have been sold out are the ones that are causing the most volatility. So, things like, if you watch Kathy Wood and her, I call it Kathy's Casino, if you look at those stocks, they're highly volatile. Last time I looked, we only own 4 of Kathy's stocks. So we've already flattened, I hate to use this term, we flattened the curve on that strategy because we just don't own many of those stocks. Most of them had rolled over. There's a lot of risk in them. They're highly risky. But when you own that individual ETF, you're experiencing all of the relative volatility. So that's the point of everything that I do on this channel, is really talking about to the portfolio management viewpoint, and that helps you to do a lot. So if you're still owning stocks and you don't have a process and all that stuff, then you might be overexposed. And right now, I feel like we're appropriately exposed. And like I said, we've been selling since last 2 weeks. We've had, on a short-term basis, we've had a massive amount of selling, 11,000 versus 3,000 buys. So we've had net 8,000 sells. So all of the risk from a portfolio viewpoint, from Bob's world, from WaveTech, from Portfolio Expert, most of that risk has been downsized, and in some cases extremely so. So that is the perspective when you're running money. I talk a lot about this, that you want to manage your money. You don't want to be speculating and just buying options and doing that stuff. And so we deal with a lot of 401k money, a lot of professional money, but also the same on individuals. So you have that same responsibility to that money. So this is really when I talk about and show you everything I did tonight on the database. It's really about that element. So anyway, folks, I will be back tomorrow night, and I will do a live stream on Wednesday during the market hours. I want to see what happens, and when the Fed comes out, we'll see what kind of volatility we get. If you're not following me on Twitter, make sure you do that. It's Twitter/ and it's Portfolio Expert, no E in the expert, and go ahead and join there. And I may do something this coming week like I did last week. I mentioned last night. I did a live Twitter where we could actually talk. I could actually, instead of, I don't have time when I'm doing these shows to look at this runner, but you know, all the comments on the channel, and focus on what I need to do. So it was nice getting a chance to talk to many of you. So anyway, I will be here tomorrow night, same place, same channel, all that kind of good stuff. So make sure you subscribe and like these videos.